Hey warriors, I hope you're all doing great. This is your friend Rahul Agarwal and I'm here before you to discuss with you quickly the paper of your CA Inter Direct Taxation which came in for the recent Jan 2026 examinations. Now, before I proceed forward, I would like to very honestly tell this to all of you. I am not happy doing this review. This is for the first time I'm coming on YouTube to express my concern on the kind of pathetic, worst, difficult, and unreasonable paper made by examinations of ICAI, not because the paper was difficult to answer, but because the paper was wrong to even attempt of. Yes, this is the kind of paper which you do not attempt even at CA final level. At CA Inter, you don't even expect a student to know this much kind of things. But forgetting CA Inter, I don't think a CA final student is also deserving enough to receive a paper like this. I know papers are supposed to be difficult. I know ICI wants to up its standards, and I'm personally in favor of that. September 24, when the paper was extremely difficult, I was the first one to come and say I'm happy with the paper. Not because of the sadism nature I have, but because ICI was gaming its standards. ICI was really telling students to stop mugging up and up their standards to learn things on a more practical fashion. Over the course of 7 years, we have also tried the same. We've tried to give students the best amount of knowledge that we can give from our side so as to make sure that a student does not just clear CA by marks but also clear CA with the passion and interest he wants to do it. But when you look at a paper like Jan 2026, you start doubting yourself. You really start asking yourself, are you doing the best from your side as well? As a faculty, do I really need to be doing something different for my students to even be able to attempt a paper like this? Attempt a paper which is wrong to that extent. I'm not even kidding about it, people. I have had a chance over the last couple of weeks to discuss with a lot of other faculties and see how the paper was. And trust me when I tell you this, every faculty has had a different opinion on every single adjustment that they had put out. Every faculty talks about it differently because of a simple reason. Some faculties look at it specifically from a CA inter student perspective, which makes sense. Some faculties like me look at it from a CA final perspective as well, because we are a little bit more aware about case laws and stuff. That makes sense. Some faculties like me who are approaching the market, who are already available in the market and know how the market is running, know things a little more seriously enough because we also know what is happening as an issue in the market. And that is the kind of paper this has been set off. This paper does not make sense and definitely does not mean like a paper which a CA inter student should ever receive in his life. So yes, for the very first time I would like to come and tell you that beyond the paper being difficult, it is the worst paper I've ever seen in my career, and I really do hope ICI looks into this very seriously. It's a different thing to up your standards, but it's another thing to play with someone's life to that extent. I know I'm making this video a little bit next to what your CA inter examinations have got over. You have just completed your examination, so this is not the video you should be looking for, but I want to be upright with you. I do not want to sugarcoat anything with you. I am not in this video going to any point of time come and give you any convincing thought saying it's okay, you could have done this question and still scored a mark, you could have done this question and still scored a mark. I'm going to be extremely open and honest about every single adjustment that I saw. I had my opinion and I felt was wrong. I'm going to give that outright to you so that you take this as an opportunity as well, that tomorrow if ICI does open up a suggestion portal where they ask you the opinion on the subject, you are able to very openly tell them that they made blunders into this whole paper, and students who have definitely put in their foot forward and attempted it should deserve to pass. This is my request to all of you. So with that open mind is what I wanted to look at this paper. Yes, this is also for my May 26 students and forward. To be very honest and be clear that this paper is not worth attempting even for the purpose of practice. You will not be able to find the right answers in these questions. I am telling you people that when the suggested answers come out and if the person really plays it well, you will see most of the suggested answer having alternate answers for every single thing. That is what is going to happen in this paper. I have taken this opportunity for the very first time to write down answers in an answer paper. I generally have a tendency to do it as much as an exam student, which means I open up the YouTube channel and for the very first time I do the paper along with you students so that we can also have a feeling as to how the paper was. But no, for the very first time I wanted to take this opportunity to review the paper once independently from my side with all the patience in the world so that I can openly come and tell you every single thing that was wrong. Yes, I'm going to go through the paper, people, and you will see at various stages there'll be red markings. In fact, a lot of places there'll be red markings, which is going to be triggering the point as to why this paper was wrong and what went different. Yes, on that understanding is what we're going to do this paper, people. So yes, I'm not going to waste any more time. I want you to look at this paper very seriously along with me and mark out all those things which you have not been able to get right. You will realize that this is something that you have to keep in mind, so that tomorrow, when if you don't clear this examinations, you can raise a voice before ICA and come and tell them that, sir, I'm sorry, but this is not what you were expected to do from me. Yes, let's keep that in mind and let's do the paper accordingly. I'm going to go through the paper in the same fashion as what the paper looks like. Yes, I'm not supposed to go through MCQs first, but rather do the simpler questions, but I am going to go in the same sequential format just to be convincing to you. We're going to start with the MCQ paper. The first is your case study scenario. The case study scenario starts with a person called Mrs. Anisha. Mrs. Anisha is an Indian citizen aged 50 years who has left India on 29 September 24. First thing, I'm not going to tell this is wrong, but yes, it was a difficult thing. Attempting ICI directly on the 29th September does confuse students. We know when we were at residential status, the fact is that it is 182 days or more. So sometimes when students read it, they tend to skip that exact 182, which means a student may be confused in exam whether 182 becomes a resident or a non-resident. But yes, 29 September, when you calculate the number of days, it will hit 182 days, which means you are a resident of the current year. With that facts into hand, it says that the person has left India for permanent settlement. Now, exception only applies to not consider 60 days and 365 days when 192 is not satisfied. The fact that 182 is satisfied, meaning the person does not have to worry about the fact that he's leaving India for employment. He is going to be a resident for the current year. Next, prior to this, she had never traveled outside India, which means in the past 10 years, she has always been in India. If she is a resident of current year and in the past 10 years she has always been in India, it automatically means that the person is going to be treated as an ROR for the current year. This is point number 1. The person has owned a self-occupied residential property in New York, USA. The expected rent for the house as converted into Indian rupees would have been 20 lakhs. Now, first things is that you're an ROR, so which means a foreign asset is also going to be covered in your scope. But because the question says that the person is holding a self-occupied property, it automatically means that you don't need to worry about the annual value of the property. A self-occupied property automatically means that the annual value is automatically going to become 0, and the only thing you can claim as deduction is interest on loan, provided you're in older tax regime. Yes, so I am not going to take into consideration anything relating to the 20 lakhs because the 20 lakhs does not matter to me. Next, she has also earned an interest income of 11,50,000 from USA pension fund and has received it in her US bank account. Again, because I'm an ROR here, the global income becomes taxable, which means this 11,50,000 is going to be taxed under the head IFOS. Till here, I hope you are making sense with me. Yes, I know 29th September could have been a game changer. If you've made a small mistake on the 29th September and probably considered 182 as a non-resident, it means everything in this paragraph is not going to be taxable for you and you've made the first mistake here. But nevertheless, I'm assuming this is the bare minimum you should have known. Good, let's proceed forward. In India, she is now owning 2 more residential properties. One is House X and one is House Y. House X was also self-occupied by her, which means again I have a second SOP. As a person, I can hold 2 SOPs. This is my second SOP, perfectly fine, not a problem at all. The annual value of the property is given as 8 lakhs, which again I am going to ignore as it is. Now comes the problem. It says House Y was let out for generating regular rental income, which means this is my first LOP house. I have my LOP house in my hand and I can start taxing this accordingly. Now, the question says House Y is situated in a famous is situated near a famous temple and was rented out to Mr. Amit for an entire financial year of 24-25 at a monthly rent of 60,000 rupees, which means I've given this house on rent for 60,000 rupees per month. Due to the upcoming annual temple festival attracting millions of devotees, the tenant found it difficult to reside in the area and has decided to shift to another premises. Okay, simple English. He refused to pay rent for 2 months, which means this person has now decided to not pay me rent for 2 months. I am going to incur a bad debts, which is what we call as unrealized rent. Now here is where the problem starts. It says unrealized rent normally has a condition, people. Unrealized rent says that you can reduce it from your actual rent if 3 conditions are satisfied. The tenancy should be bona fide. You should have tried to recover the rent. The tenant should have vacated the premises, and if he's sorry. And if he's vacated the premises, he should have not taken any other property of the assessee. Yes, that is what the 3 conditions are. You satisfy the 3 conditions, it will be reduced from your actual rent. Now look at this carefully. It says, though the tenancy remained bona fide, condition number 1 satisfied. To maintain goodwill, Mrs. Anisha has offered him another semi-constructed residential property, which Mr. Amit accepted and shifted to that house. Now here is the problem number 1. Notice carefully, most of the people will come and say that because you've given him another house, In that case, condition number 3 has not been satisfied. And because condition number 3 has not been satisfied, the unrealized rent cannot be reduced from your actual rent, which means 60,000 into 12, full 7,20,000 is your final answer. Yes. Now I agree. I definitely agree because that makes sense. This is what the point is. But here is the catch point. If you notice carefully, unrealized rent provisions come and say that when a house has been vacated and another house is given, only then does it consider it as unrealized rent violation. Notice this line carefully. It uses the word offering him another semi-constructed property. Now, for those who have learned HP properly, people, HP properly comes and says HP means any land with a building attached to it. There are some past adjustments in ICI itself where they've come and confirmed that an under constructed building, any kind of building which is still under construction, which is not ready for accommodation and all those things, those kind of properties are not called as a house. By that logic, I can make a defense here and come and say, in condition number 3, which says you should have not given him another house property to occupy, this is not even a house property. A semi-constructed residential property means the property is not completed yet. And if the property is not completed yet, it means you have not given him a house. If you have not given him a house, condition 3 does not get violated, and therefore you are still eligible to claim your unrealized rent as a deduction. So I hope you understand this. If I come and tell that this is a house, that means that the person cannot reduce the unrealized rent. But if I say it is not a house because it is under construction, semi-constructed, then I can come and say that the condition is not violated and therefore unrealized rent can be reduced from the actual rent. Problem number 1. I want to understand this carefully. Why would you unnecessarily give a word called semi-constructed with a residential property? First of all, why is someone else going and living in an under-constructed property? Second of all, even if he's living in an under-constructed property, then I would come and say it is not a house. It should have been taxable under IFRS. Problem number 1. Problem number 2. Let's also understand this fact. Because you did not pay the rent for 2 months and to maintain goodwill, you have given him another house. It means you were supposed to receive rent for that house also. Did you receive the rent for that house? No information given anywhere. You have not been confirmed anywhere that the rent for that house has been received or not. The semi-constructed residential property has been given to the person. But for that, is he not recovering rent? If you assume that he is recovering rent for that, then in that logic also I can come and say that the 2 months rent which you were supposed to vacate here, you are taxing it there also. Which means this person is now going to be receiving 2 kinds of rent. One is rent from the main housewife. And then is the rent from the semi-constructed residential property, which also should be his income. Now, you can come and tell, yes, Rahul, but what if the house property was given next year? Where is the information given? You have nowhere mentioned in this information that the house was given to him next year, which means I can make an assumption that the house was given in the current year also. And if that is the case, then to that extent, the 2 months old property also should be taxable enough. That information is missing here, which means I don't have enough information for me to proceed on the question right now. But okay, why is this important? I will see you multiple answers. In that multiple answers, you will see only one answer is matching with the options, which is unfair. When you have given such vague statements, it is your responsibility to also give multiple options so that students can at least match on it. If I have made a different assumption than another student, you are not the one who's supposed to bind me to one option. That is not fair from your side. Yes, this is me talking to ICA very honestly on camera. I don't care. Let's read further. It says, Mrs. Anisha is also entered into an agreement with Mr. Nagesh, a renowned parking contractor, to lease out her garage for a parking space at a ground floor of housewife for 4 months at a rent of 55,000 per month. Now, in the house itself, I have a parking garage. This parking garage also has been given on rent. Here is the second problem. Notice this Nagesh has been given a house property, garage parking. Now, normally you would come and say this is composite rent and therefore to that extent should be taxable in HP itself. But at the same time, you have given a separate rent, which means I am separating my house along with the parking garage. And to that extent, I can come and say, intention here was never to give the house. This is an exclusive person, different party altogether. Because I am giving a different party, not a house, but a parking space, I can then come and say that this should be taxable under IFRS. But there is no such option like that. ICI wants you to understand that this is only going to be taxable under HP because in the options, there is no option which will come and reconcile to the fact that 55,000 is taxable under IFRS. They have made an assumption it is taxable under HP. We are going to go with that. During the financial year, the business turnover of Nagesh has been given as 95 lakhs and the financial turnover of 1.1 crores is given to me as per the facts of it. Now, because Nagesh is going to take a house property, Nagesh has to do TDS on it. Now, Nagesh code TDS கண்டதுக்கு you have to do hijacker rules. Hijacker comes and says 194 I will not apply if the previous year turnover is less than 1 crore. Notice here it is saying 23-24 and 24-25. I don't need to take 24-25 because that is current year's turnover. Past year's turnover is 1.1 crores, which means hijacker rules are applicable to you. 194 I is going to be applying in this case. That is what they have come and confirmed to you. Yes. Next, house X and house Y was acquired in the year. Bank loan is taken of 25 lakhs, 30 lakhs. Anisha has paid 2.5 lakhs for house X, but interest of 3 lakhs was accrued on house Y, which could not be paid by house Y. They have come and confirmed that you have not paid the interest. It doesn't matter because when it comes to interest loan, you can claim it as deduction even if it is unpaid. Only municipal taxes have payment conditions. From the following conditions, you are required to answer the multiple choice questions with Anisha and Nagesh opting for default tax regime. See, DTR has been questioned, which means now in a DTR model, whatever interest you have paid on an SOP property is going to be ignored off. And by that logic, I don't care about the 25 lakhs, the 30 lakhs, the 2.5 lakhs. I'm only bothered about the 3 lakhs, which is coming from my house Y. Yes, this house Y alone is what I'm going to take as my interest on loan for LOP property. And this is what the case study looks. Now let's try to answer the questions. First one says, what would be the residential status of Mrs. Anisha? Like I said, 182 days satisfied, no leaving in the last 10 years, and therefore the person should be ROR. This is fine. This is fine. If you have focused a little bit on the 182, you would have got this answer, no doubts about it. Question number 2. Here is where the problem starts. It says, what would be the total income under the correct head of income of Mrs. Anisha? I want you to notice carefully. Because I am an ROR, 11,50,000 of IFOS is already confirmed. This I know is going to be taxable. So if I look at my options, 11,50,000 here, 11,50,000 here, 11,50,000 here, and 11,50,000 here, which means they have confirmed to me that this is going to be not under IFOS. Yes, which means for me it is not going to be IFOS, that is confirmed to me, which means either I can move it to PGBP or I can move it to HP. By that logic, PGBP is definitely not possible because I'm not in the business of letting out, and so HP is the only answer. And so ICI has indirectly confirmed it to you that you have to take the 55,000 of rent under HP chapter. Okay, here is my alternate assumptions. Alternate assumption number 1, the 11,50,000 has been taken, I have agreed with it. The garage has been taken for 2,20,000, which is the 55,000. Now comes the house. Assumption number 1 is where I'm coming and telling that in the house 7,20,000 should be taken as it is, because I am going to assume that you have given him another house to live, and therefore no unrealized rent can be deducted. By computing the whole answer, the answer will come to 3,58,000, which matches with my option number D. However, like I said, if you make an assumption saying the property has not been given out, if you make an assumption saying the property has not been given out, you have not given him a full constructed house but rather a semi-constructed house, conditions are not violated, unrealized rent can be deducted. If you do that assumption, then the unrealized rent becomes 6 lakh rupees. And if the unrealized rent is going to become 6 lakh rupees, the computation should have come to 2,74,000. Yes, you can check the computation, you will understand the computation. Now in that 2,74,000, I don't see any option which will make sense. Look, option number 1 says 4,08,000, no idea where this number comes from. Second one says 2,54,000 and then some PGBP is coming into picture. No, definitely not. Third option comes and says I have again 2,04,000 and 2,20,000, which again does not make sense, which means ICI has bounded you on the assumption that you should have not reduced unrealized rent. Yes, now you can come and tell me, yes Rahul, what is the big deal? You got one of the answers. No, how does it matter? But no, people, that's not how it works. This is MCQs. MCQs means you have to be completely clear and no giving vague assumptions. One mistake which happened in the similar fashion, Jan 2025, ICI made the same blunder. Unnecessary gave in a case law question of agricultural income where they started coming and asking weird questions. We all made many amount of assumptions. My previous video you would see many alternates were given and I had prepared all the alternates to find only one answer in it. ICI very honestly on that day suggested answers, gave all answers saying none of the options are correct. They literally put in an answer which said none of the options are correct. Question number 1 is also wrong, 2 is also wrong, 3 is also wrong, 5 is also wrong. All questions were assumed to be incorrect. Now I'm not sure if students got grace marks on it, but they should get it. This is one question like that. This is one question where I would really urge ICI to give grace marks to students because it is completely unfair on them to make such comments. Semi-constructed residential property is wrong to put in the wordings, is not something you should have agreed upon. Yes, that is one assumption you're going to make. Third thing, how much TDS will come? Again, people, this is something which I felt very unhappy about for one reason. I know, yes, TDS is part of your syllabus, no doubts about it. But very honestly, most of the faculties in ICI fraternity has come and confirmed it to students saying TDS is a very voluminous chapter. At CA inter level, it is not expected students to know TDS so much difficultly enough. And therefore, most of the times we always encourage students to come and skip this chapter. Yes, because you have many, the DT itself is a very vast subject, and to that extent, TDS is not a topic where you can pay too much attention to. There are too many sections for you to remember at CA inter level, and now that you have not handled it practically, it is not fair on your part to also come and test on it so much. By that logic, we have always requested students that question number 2B is TDS, which is going to be about 4 marks, and therefore it is fine for them to skip it off. But here is for the first time, ICA has tested you on TDS in 2 MCQ questions and then also tested you on that in your 2B, which means technically that became about 8 to 10 marks worth of TDS in your examinations, which is not fair. For a student who always tends to skip TDS and go, they would have lost enormous amount of marks on TDS, which is not fair. Now, I do agree, as a faculty, I can come and tell you, no, it's important to study, but let's think from a student's perspective. From a student's perspective who generally tends to skip TDS, you are going to lose a lot of marks. 10 marks out of 50 marks is no joke. I'm serious about it. Yes, and therefore it should have not happened, but okay. Let's be calm on that. Yes, TDS deductible parking charges, again, because it is 194I, 2,40,000 ka limit hai, because only 2 lakhs worth of payment, 2,20,000 worth of payment was made, threshold has not been breached, and therefore the answer should have been nil. Now, some students who would have remembered probably a little bit of the provision may directly do 10%, and 10% would have given them option number B. Ideally, the answer is option number C, so that's unfortunate enough. Yes, so you could have probably lost marks. I'm not even going to doubt on this, which means in this question, unfortunately, 182 days would have costed you question number 1. This question definitely is wrong, so would have costed you question number 2. Question number 3 you would have not attempted because of TDS rules, and therefore technically 6 marks down the drain. None of you would have got the MCQs right. First question, no marks. Unfortunate. Question number 2. Question number 2 comes and says, I am Mr. Prakash, resident Indian, age 61 years, senior citizen, purchased a shop for 15 lakh rupees in 2004. I have bought a property. Registration and other expenses were 12% of cost, which means I'm going to add it to my cost of the acquisition, which means 15 lakhs plus 12% is going to be cost of acquisition. He entered into an agreement for sale of shop to Mrs. Money in January 2014. The sale consideration was fixed at 20 lakhs, where Prakash had received 5 lakhs as advance on that date. Generally, people, capital gains itself, I've told you there is a format. Format says, if you see any advance and all coming into picture, ask yourself if it is before 2014 or after 2014. Sorry, give me 1 second. Yeah, so we normally come and check about before 2014 and after 2014. If it is before 1st April 2014, then we reduce it from cost of acquisition, and if it is after 1st April 2014, we add it to the IFOS statement and do not tax it in capital gains. So this is probably from that. Your 20 lakhs is not relevant because the sale is not going to go forward. 5 lakhs is the advance which is given to you. February 2014. You have decided for failure of part of Mrs. Money, negotiation has not materialized, amount has been forfeited off, which means this amount has to be reduced from your cost of acquisition, full stop. Next, Mr. Prakash has entered into another agreement on January 2024. Again, this is not your previous year, this is your previous year. Previous year mein, the shop for sale has been 10 for 25 lakhs, advance received is 8 lakh rupees, but on 15th April 24, Madan denied to complete the agreement due to non-availability of funds, and Prakash forfeited and retained the advance on the agreement of that date. Again, second forfeiture has taken place. This time forfeiture has happened after 2014. Trick part here is, people, negotiations would have started in Jan 24, but actual forfeiture only happened in April 24, and therefore the actual forfeiture rate is more critical. The agreement date is not critical. The forfeiture happened on April 24, which is your relevant previous year, and therefore this income has to be taxed under IFOS. You will have to take that into IFOS, which means this 8 lakh rupees is now going to be taxable for you. You're going to tax it accordingly. Yes, good. Next, it says, finally, Prakash has decided to sell this shop on 23rd June 2024 for 45 lakhs. A very below the belt move, I would say, people. I know people are supposed to be aware about dates, but let's be honest. You have been informed that LTCG for the only 1 year, this is the last attempt that you could have tested on this, and therefore students are already struggling with the fact that they have to remember 2 tax rates. One is before 23rd July, one is after 23rd July. No doubts about it. But see, giving a question where you say 23rd June is unnecessary confusions. If you would have given 23rd July, it still would have been wrong. But at the same time, you giving 23rd June is now confusing the student. On a day of exam when they're already scared to their life of it, if you suddenly give 23rd June, a student is now deliberating whether it was 23rd July or it was 23rd June. That kind of confusion is only wasting his time here. It would have taken a minute for you to give 22, 21, students would have still been happier. Giving 23rd June is an unnecessary below the belt move to confuse students. Now, I'm not telling you this is wrong. This is definitely a good part from ICI to test you on very minute details, but still not exactly expected out of you. Yes, 23rd June unfortunately is before 23rd July. Therefore, you should have not gone for index. You should have not gone for new rules. You should have gone for old rules of indexation. That is what I say. I try to test you here. Now, if you had a slight amount of confusion in exam that it was 23rd June or 23rd July, you probably may have gone for new regime, which means you're going to lose marks here as well. He has then gone ahead to deposit 5 lakh rupees out of sale proceeds in fixed deposit for 5 years with post office scheme, which means 80C has been tested here. This was unfortunately not your 54EC. It was not bonds where you could have got 50 lakhs ka deduction. This was your 80C because you've done a fixed deposit for 5 years. That is an 80C condition. Now you cannot deposit about 5 lakh rupees. You can only deposit 1.5 lakh rupees. So therefore 1.5 lakhs is the maximum deduction you can claim under 80C. Next, you've also earned an interest of 26,700 rupees on such FDI during the previous year 24-25. Person has decided to shift out of default tax regime. Person is going for ATR. Here is where if you have not paid proper attention, you would realize that on the top the person was a senior citizen. Because the person was a senior citizen, section 80 TTB will apply, and 80 TTB comes and says any interest that you have paid will be claimed, any interest that you have earned will be claimed as deduction up to a limit of 50,000 rupees, which means this 26,700 can be claimed as full deduction. It would not be restricted off to 10,000, neither will it be denied because it is deposit from fixed regions. It is fully allowed as deduction because you are a senior citizen. That is what I say. I try to test you here. Person has opted out. Cost inflation indexes are given to you. Now, cost inflation indexes have to be taken properly, people. I am not going to take any inflation index of the prior years. I am only going to take the inflation index of the original purchase date, which is of 2004, and the sale date, which is on 24-25. Yes, so which means which means 113 and 363 is what my indexation rules are. And with that, I need to answer my question of. Let's look at the answers. It says from the following information, what will be the most amount of tax what will be the amount of income tax payable for income under capital gains? Again, 23rd June, therefore you have to do indexation rules. What we should do, full value of consideration is 45 lakhs, original compensation was 15 lakhs, adding the registration cost of 1,80,000 because it is directly relating to the asset, reducing your advance forfeiture before 2014 case, 5 lakh rupees will be reduced, and therefore my cost of acquisition became 11,80,000. On this 11,80,000, if you multiply the number of indexation, your answer would come to 37,90,619, giving me my final long-term capital gain as 7,09,381. This is what the answer was. This is what the answer was. This is the statement which you should have properly done. Yes, now I am not going to deny at any point of time, no mistakes here. Definitely a good question, but yes, little bit difficult from my perspective. Second, what will be the amount of income taxable to Mr. Prakash under the head income from other sources? Now people, income from other sources, what you have to do, simple, straightforward. You have to understand this first thing carefully, that they use the word income from other sources. They have not come and asked you total income, which means even though 26,700 of FDR is eligible for 80 TTB, that's a chapter 6A reduction, not an IFOS income. IFOS may you are still going to tax that number, and therefore the advance forfeiture which happened after 2014 of 8 lakh rupees and the interest on FDR of 26,700 is going to total to 8,26,700, option number B. This definitely right question, no difficulties whatsoever. You should have got the right answer. This was definitely manageable. If you have done the capital gains format properly, you will get this right answer. You should have not made a mistake here. No complaints whatsoever. Question number 3. It says, what would be the tax liability of Prakash for the assessment year 25-26? I've taken some time and completed it of people. IFOS was 8,26,700 from the previous question. The chapter 6A reduction is 1,76,700, which is nothing but the 1,50,000 of ATC and the 26,700 of the interest income, making the number as 6,50,000. Separately, you had a long-term capital gains of 7,09,381, which is going to be taxed at the rate of 20% as it is. Yes, on your other incomes, you're going to do a slab concept. Understand, this question comes and says the person is a senior citizen, which means your slab is going to be for the first 3 lakh rupees. So what did I do? For the first 5 lakh, we took 10,000 rupees. For the balance, we took 30,000 rupees. Total the number, answer is 1,89,150, which means the answer is option number D. Answer is option number D. I am not going to tell you anything wrong in this question, but yes, difficult. No doubts about it, difficult. If you have read capital gains properly, you would have got the answers here. Otherwise, yes, you're going to lose it off. Generally, I have seen people skipping capital gains because it is a little complex from exam perspective. But if you have not skipped it off and you have done it, then this would have come out right. If you have skipped it off, question number 1 is also gone. Question number 2 is also gone. Very unfortunate, but that's the reality. Yes, problem starts from here. I wanted to look at this question. This question is something I'm extremely unhappy about. I'll be very honest with you. Like I said, TDS was not supposed to be a very important topic from examination perspective, and yet ICAI decided to choose TCS for that matter. Now, I can open up the study material and tell you this, people. Study material of CA Inter comes and clarifies that TCS is just a pass-through topic. ICAI literally in TCS on the bottom has come and said the topic of TCS will be dealt at CA final level. Now, I'm not denying it. You could have tested on the amendments and everything, that's fine. But the kind of question you asked, the very specific question that you asked, is not a question any student would have paid attention to from an exam perspective. This was very unfair from my perspective. The question says, there is a Pier Parking Plaza Limited leased out one of its parking spaces to Greater Park & Co. partnership firm at a price of 50,000 per month on 1st May 24 and has received 6 months lease rent in advance on the same day and the monthly rent from November to March. You have received rent for basically 11 months. Yes, you have started from May. So yes, 11 months you have received rent. 50,000 into 11 months current, which is about 5,50,000. Now TCS rules come and say that you can collect TCS at the rate of 2%. So the answer became 11,000. Agreed to this fact. Read further. It says it has also given another larger parking space to DP Park Limited, a public sector company, on a lease of 1 lakh per month on 1st June 2024, which then debits his lease at the end of each month, but the payment is made at the end of year only. Yes, anyway, it has happened during the year, so it does not really matter. You are required to determine the amount of tax to be collected. Now, TCS mein, there is a very specific rule. The rule which comes and says that when you talk about collecting TCS, you cannot collect any kind of TCS from government, embassy kind of people, and a very specific thing called as public sector companies. To toll to a public sector company will not be liable for TCS, and that is what they try to test you here. A very specific condition where they try to test you that public sector company is not liable for TCS, and therefore the second one is not going to be liable for TCS, only the first one is liable, which makes your answer as option number C, which is 11,000 from Greater Park and nothing from DP Park. Not fair at all, completely not fair at all. I will tell you very honestly, in my class, I myself would have not paid attention to this TCS topic because I would have given students the impression on what TCS is. I would have come and told them what are the amendments of the current year and what are the rates, but I would have never paid attention to the fact that there is something called as a buyer definition and something called as a seller definition. That's way too much to be asking a student. At the same time, even if I would have told it from my side, I'll be very honest to you, even if I would have told it from my side, no student would have kept it in mind from exam perspective. Not completely not fair. This should have not been done. Yes, but nevertheless, that brings me to the last individual MCQ question, people, before I move you forward to the comprehensive ones. This case question is not right at all. Completely unfair, completely unjustified from ICAI perspective, because I will tell you this very honestly, as a CA final faculty myself, we do not discuss this at CA final level as well. This is an open judgment going on in the market right now. In the market, ITATs are making decisions on this because assessing officers still does not agree to this position, and that is why it is not fair on ICAI to come and test you on something which was not even part of syllabus at CA final level as well. Now, I can agree that this is something which is going on in the market and there are some favorable decisions, but trust me, for an examiner, just because you know some practical issues does not mean you are supposed to test students something out of the syllabus. Let me show you the question, you'll probably understand. Question says, there is an amount of 50 lakh rupees which is given by Thapar Limited to a trust for construction of hostel under corporate social responsibility as a part of mandatory spending, which means I'm going to make a payment of CSR. The amount was subsequently charged to profit and loss account for the year ended 31st March 25. The Thapar Limited has booked it in the P&L. Okay. While computing the business income of Thapar Limited, the treatment of this expenditure should be what? Now, I wanted to read this question. It says, while computing the business income of Thapar, which means they only wanted to know what is happening in the business level. If that is the case, I don't understand option number D. Read the option number 1. It says no adjustment is required while computing business income as it is an expenditure under the law. No. We have a specific clarification under 37. Explanation 1 comes and clarifies that any expenditure made under CSR is a mandatory disallowance because it is not incurred for the purpose of business. So option A is wrong. Prima facie, you come and ask me, I would say option B is right. Yes, because option B says disallowed while computing business income. Perfectly fine, perfectly agreed. Option C says disallowed such amount while computing business income and capitalized. No, people, you have only donated number. You have not made a building to yourself. Therefore, capitalization is not happening. So this is also unfair. Point number D. It says disallowed such amount while computing business income and claimable as deduction under ATG. What is this? What is this? If you come and tell me on the top that you want a treatment of a business income, why would you ask me option number D? And I'm telling you this because people, this is a question going on in the market. ITATs, various ITATs, Ahmedabad, Delhi, Gujarat, everyone has come and talked about this, where they are now coming and contending the fact that when a company pays a CSR expenditure to a trust which is registered under ATG, they can claim ATG deductions. Officers are still not agreeing to it because it is still pending before High Court right now. ITATs have been making this decision. Now, for those who have known CA final would know, at CA final level also, we do not discuss any ITAT judgments. We are only allowed to discuss about High Court judgments because even ICI agrees to the fact that ITAT judgments can be overruled later on. By that logic, when this is not even a part of your CA final syllabus, I don't understand why is it being tested at CA Inter. Now, I am going to tell you that to my students in my class, I have confirmed to them that when you have CSRs, you can claim ATG. So most of my students would have written the answer as option number D. I would agree to them. But here is the question. If option number D is right, then why would you come and ask what is to be done at business income level? When you only wanted to know about business income level, what is the point of asking chapter 6 reduction here? Do I have to interpret the question to an extent where I should say you only wanted business income question, so D is not to be checked? Or do I have to come and say I have to give you additional information because D seems fair? D does seem right because you don't know whether the trust is registered or not. This is question number 1. Question number 2. At no point of time have you come and told me what Thapar Limited is. People at CA final level, you'll know Thapar Limited is eligible for something called new tax regime. As much as individuals have something called default tax regime, even companies have new tax regime. And if Thapar Limited would have opted for new tax regime, then option D would have not been eligible to him. Which means question is blank to that extent. Question just simply comes and says you want Thapar Limited without confirming whether Thapar Limited is opting for old tax regime or new tax regime. How does that make sense? Yes, which means this question is completely unjustified and unfair because nothing of the options can be fine. I can tell option B is also correct and I can tell option D is also correct. My personal guess, I would say option D is correct on the assumption that Thapar Limited is going for old tax regime. Yes, but here is the problem where you say option number B is right, and I'm not denying it. I've seen so many faculty videos, my fellow faculties in the other market who have come and put on YouTube saying option B is right. I would agree. If you tell me you only want business income, I would say option B is correct. But in that case, confusing you with option D is not justified. That is not fair because as a person, I would come and tell you it is option D. As a person, when I come and prepare an income computation statement, I am not bothered about business income. I am also bothered about total income statement, which means I would say option D is also right. That should be given equal weightage, and therefore from an answer perspective, B or D both can make sense. Both can make sense. Yes, this is what your MCQs look like. 30 minutes I have wasted discussing MCQs with you. Imagine a plight of a student who has to spend time on this. 15 marks worth of MCQs, 30 minutes Rahul has wasted discussing this MCQs with you. How do you expect a student to be able to answer these questions is something unclear to me at this point of time. But okay, fine. If you think MCQs are difficult, I would agree. Give me a chance, let me properly do descriptive. Fair enough, I would have agreed to ICA, but no. ICA wanted to play a very different game on descriptive. Descriptive went even more pathetic. Let me show you the descriptive part. Now, I know I'm very agitated. I know my voice is not clear. I am being extremely annoying at this point of time. But trust me, people, I am way more annoyed than when I can show on the camera also right now. Yes, this is the question. A very unfair question number 1. Comprehensive question always comes with an impression that they'll give you certain amount of adjustments. You have to make that adjustments and find a total income question. Very simple, straightforward. Yes, you can make some difficult adjustments here and there, but giving a wrong adjustment is unfair. Very unfair. I'll tell you why. Read the question for me. It says, Mr. Neeraj is a resident individual aged 55 years and is an interior designer, which means at this stage, I can confirm the person is a professional. Yes, so one thing is clear to me that the person is a professional. He had also started a business of publishing of books. Now, here is where I'm stuck. It says, I am in the business of publishing of books on interior designing. I want to understand this a little more seriously. When I say interior designing pe, I'm publishing books. Does it mean that I am a person who's going to author the content in the book and then publish it? Meaning I am more like a copyright holder. Or is it that I'm coming and saying I'm simply going to publish books, publish as in print books, which means it may not be my book alone. It may be someone else's book also, which I'm doing. Now, Rahul, why are you paying too much attention to it? Understand carefully. If I am in the business of publishing books, in the sense my job is to make my own content and print it off, then in that case, I am doing a normal activity. It's a trading kind of an activity. But if you come and tell me, I'm in the business of printing books, which means I'm going to take someone else's material content and I'm going to print books, CA final syllabus will come and confirm to you that this is a manufacturing business. Manufacturing business means that you are now eligible for additional depreciation on these assets which you use for publishing business, and that is going to hold a significant amount of impact on one of the adjustments you're going to see forward. Yes, let me once again explain this to you. Income tax may nowhere it has been clarified what do you mean by manufacturing business. Till date, every time CA inter examinations mein ICAI will come and tell you the person is engaged in manufacturing business and therefore should do this. This is for the first time ICAI comes and says there is some book, that book I am doing publishing. Whether I am in manufacturing or I am in trading has not been clarified, and therefore it is left to your open discussion on making an answer. And this is going to make such a significant amount of differences in this whole question that I'll show it to you right now. Question says, after that it's providing in-depth knowledge to builders and homers. So it says I'm going to publish books which is going to help in-depth knowledge to builders and home buyers, which means probably I am the one who's making the content and I am the one who's publishing or printing that book from my perspective. His total turnover and gross receipts from the business was given as 16 crore rupees during the year. The net profit as per the statement is given as 1.27 crores after debiting and crediting the following items. These items have been debited and credited. 1.27 crores has been confirmed as your PGBP income before making income tax adjustments, which means one thing is, if you are going for optional tax regime or new tax regime, you are fined to be a rich person, you should have levied a surcharge of 15%. That is the understanding. Let's read further now. It says, he has purchased an annual publication on interior design from the local market on 8,500 rupees and has paid the whole of the amount in cash. The depreciation at the rate of 40% has been claimed on this publication. Now, people, for those who know, books ke liye, income tax makes a very clear statement. For purpose of books, including annual publications, you are going to be liable for a depreciation at the rate of 40%, which means the person has done it fine. But here somewhere they come and say that the payment of 8,500 was made in cash. And I'm assuming here is where students would have made a mistake. Students would have come and told you that first of all, this 8,500 rupees is not to be allowed as reduction. Yes, but here is the point. Payment in cash can only be restricted to you after 10,000 rupees, which means up to 8,500 rupees, the payment is still fine. You could have made this payment in cash and it is still completely fine. My question is here. Line on the top comes and says, after debiting and crediting the following items. And then this says he purchased 8,500 and has claimed depreciation at 40%. Up my question is the expense of 8,500 in the P&L or the depreciation of 40% in the P&L? If you going to make an assumption saying 8,500 is there, you do not even have to make the 40%. You could have probably given me the number. You could have said depreciation of this number is there in the P&L. Okay. Not a mistake, maybe. Okay, I'm being over exaggerating here. Let me say that I'm being over exaggerating. Let's assume that the asset is not there in the P&L, the depreciation is there. In which case, I will come and say, this is fine. I don't need to make any adjustment. I'm going to ignore the adjustment as it is, because you can make a payment up to 10,000 in cash and depreciation at the rate of 40% can be given. My question is here. My question is, you've bought an annual publication. Now, what is this annual publication for? Is this annual publication for your interior designer activity or is it for the publishing activity? If you tell me that this interior designer is for the if this annual publication is for the interior designer activity, you bought it for your profession, I would say 40% is the depreciation. However, if you tell me that you bought this annual publication for the purpose of publishing business, then I will come and say this is part of manufacturing operations and therefore you are eligible for additional depreciation. Yes, in which case I will come and say you should have now claimed an additional depreciation on this only under old regime. Yes, so which means I will now come and say take the 8,500 and another 20% can be claimed as additional depreciation in the old tax regime if the person is going and using this for publishing of books. How do I know this? I do not know this. First of all, as a student itself, I do not know that publishing is a manufacturing activity. Second of all, even if I know this, how do I know annual publication is for what reason? Correct? Yes, it does not make sense. Okay, adjustment number 1, gone. Tossed. Let's assume ICAI gives an alternate assumption. ICAI says ignored, you get the full marks. Good enough to go. Let's proceed forward. Question number 2. One of the most hated adjustments from my perspective. I'm telling you people, I hate this adjustment to the core of it because ICAI themselves at CA final level does not test this. The point is as follows. It says employee benefit expenses include a provision for gratuity of 8 lakh rupees made as per actuarial report, out of which 2 lakh rupees has been paid on 30th December. Current year itself paid off. 3 lakh rupees has been paid on 31st January, current year itself paid off, and this 3 lakh rupees which has been paid on 30th April, which is before the due date of return filing. Yes. Now, for those who know the law, there are two sections in income tax. One is called as section 40A7. Section 40A7 talks about provision for gratuity, where it says if you create any provision for gratuity, whatever provision for gratuity that you make in the current year will be disallowed. Any actual payment can be claimed as deduction. However, it says if you have any approved gratuity fund that you make the payment to, in that case, I will give the expenditure to you provided you have made the payment before 31st March. Then there is something called 43B, where 43B comes and says if you make any contribution as an employer to gratuity fund, then I will allow it as deduction on or before the due date of return filing. My question is very simple. It says employee benefit expenses has made a provision for gratuity and has paid on 30th December. Paid to whom? Have you paid this gratuity to the employee or have you paid this gratuity to a fund? If you have made the payment to an employee, I would come and say then 40A7 will trigger. If 40A7 triggers, then I don't even have to worry about 43B, because 40A7 says provision for gratuity will be disallowed if it is unpaid before 31st March itself, in which logic the 3 lakh rupees is to be disallowed. I cannot claim this as an expense even if I paid it after 31st March, because I did not make it to a fund, I made it to an employee. Second, if you are going to make this payment to a fund, whether it is an approved fund or an unapproved fund, how do I know? I do not know that this is an unapproved fund, which means I can now come and say that this is an unapproved fund and therefore technically 3 lakhs is again disallowed. If you say it is approved fund also, there is this huge question going on at CA final level where ICI is now deliberating about the fact that whether can you claim the 3 lakh rupees as a claim even though you have made the payment to approved fund. At CA final level also, ICI makes questions where ICI adjustment will come and tell you that in employee benefit expenses, payments were only being confirmed till 31st March. Even till date, at CA final level, ICI has never given you an adjustment where they've told you that the payment made after 31st March, because ICI itself is unclear whether you can claim 43B or not. For gratuity exclusively, ICI always shows the payment up to 31st March. Because this payment happened after 31st March, I have no idea whether I should claim this 3 lakh rupees or not, which means to the extent of 2 lakhs and 3 lakhs, the answer is fine. I don't deny it. It's there in the P&L, should be there in P&L. What about this 3 lakh rupees? Should I claim this 3 lakh rupees as an expenditure, saying that I don't care even if saying that 43B has been satisfied? Or should I come and say that this 3 lakh rupees should be disallowed because neither 40A7 will permit it nor 43B will permit it on the ground that this is not made to gratuity fund but made it to an employee? Yes, I don't understand this point. Why would you want to test a litigative issue which we are deliberating in the market? I, as a practical person working in an MNC right now, I am deliberating it myself. I just finished my CA final batch, and in my CA final batch, I have written this line with my CA final students saying any payment happening after 31st March should not be taken as an expense under section 40A7 conditions, because that is how ICI has drafted its statement. Today, I am at a dilemma here where I need to go back to my CA final students whom I just completed batch and tell them, please wait for me another month, because probably in February, ICI will come with some imaginative suggested answer, and that would become the new defense for them to prepare for the CA final as well. A CA final student now has to wait for a CA inter suggested answers just to check how they should prepare for their examinations. Tell me, how much justified are you here? This does not make sense. Not permitted from ICI perspective, should not have been done. I'll make this very clear. Adjustment number 3. It says depreciation includes 50,000 charged on installation of solar lighting systems on 10th November 2024. I have taken a solar lighting which is after Gandhi Jayanti, after 2nd October and therefore after 3rd October, and therefore this is less than 180 days. At the Factory premises, which is used for publishing of books on interior designing. See, again, they have now said that this books is used for interior designing publishing. This is made extremely clear. Ignoring question number 1, question number 3 says they're exclusively saying that it's for interior designing. The cost of installation of the machinery is 4 lakh rupees. He has also received subsidy of 1 lakh rupees from government for the installation of solar lighting system. Now, again the same question comes. It says depreciation includes 50,000 rupees charged on the solar lighting. I agree. This is there in P&L, which means the cost of asset of 4 lakh rupees should not be part of the P&L. Got it. No problem. Question is, what happened to this 1 lakh rupee? Question says he received a subsidy of 1 lakh rupees from Government of India for installation of the solar lighting, and the line on the top comes and says this is after debiting and crediting the following items. Which means, should I come and take that this 1 lakh rupees is already there in P&L? If you say yes, then I will say this is part of an asset and therefore should be reduced from the P&L. You should minus it off. Or if you come and say no, this 1 lakh rupees is not there in P&L, probably accounting treatment has been done properly. So the 4 lakh and 1 lakh are both being capitalized and 50,000 was calculated on that. If that is the case, then in that case, I would not make any adjustments in the P&L for it. Now, on the depreciation piece, again comes the same issue. Now 4 lakh rupees is my asset, 1 lakh rupees is my subsidy, net asset is 3 lakh rupees. On this 3 lakh rupees, 40% depreciation on solar lighting, which becomes 40% should be on depreciation or solar lighting, which is going to be 1,20,000. But because this asset has been put to use for less than 180 days, I should do 60,000, half of it. Yes, but again, this asset has now been used for publishing activities, which means should I claim additional depreciation? If you tell me yes, Rahul, you should claim additional depreciation, that's an extra 10%, which means now the solar lighting will be 40%, plus another 10% will be 50%, plus another 20% will be 60%, half of it will be 30%. 3 lakh ka 30% would become 90,000. Now depreciation is only showing 50,000, which means I can now make multiple assumptions. Assumption number 1, I can come and say the asset is 3 lakh rupees. 3 lakh pe 40% ka half is 20%, which means 60,000 rupees. I should claim extra 10,000 depreciation. Option number 1. Option number 2, no, take the 3 lakh rupees, 3 lakh ka you should do 60 by 2, which is 30%. So 3 lakh ka 30% is 90,000 rupees. You have only debited 50,000 rupees, which means you should claim another 40,000 rupees. Both of the assumptions can work. For one question, 2 assumptions here and 2 assumptions here, which means subsidy also should be reduced or should not be reduced, another assumption altogether. This 2 assumptions have to be made in this adjustment. One single adjustment, you have to make 2 assumptions for 2 different answers. Answers are going to change substantially because of that. Yes, this is problem number 4. I don't know, people. 3 adjustments I've seen. Adjustment number 1 I could not answer. Adjustment number 2 I could not answer. Adjustment number 3 also I could not answer. I have no idea what the answer is. Yes, that brings me to additional information. It says Neeraj has paid 20 lakh rupees as tuition fees from his own sources, including 2 lakh rupees as development fees, to a foreign university for his son's postgraduate course. Yes, now here is where the problem comes. Students generally say tuition fees, students say ATC. No, this is not ATC, because ATC says you can only claim 1,50,000 of deduction when it is paid to Indian schools. It is made to a foreign university, which means no ATC will be given to you. This information has to be ignored. This information has to be ignored. Second, it says you have also paid 4 lakh rupees as interest on educational loan for 35 lakh rupees from a bank for MBA course pursued by her daughter. This is ATE. ATE permits you to claim 4 lakh rupees as a deduction fully. Full 4 lakh rupees can be claimed as deduction if you are going for ATR. If you are going for DTR, then you don't take this into consideration. Forget DTR. Forget DTR, don't claim it as deduction. Okay, adjustment manageable, not a big deal. Foreign university, you should have been careful. Other than that, yes, you could have managed it off. Next, Mr. Neeraj by oversight did not record depreciation of 1,500 on designer equipment and books of accounts, and considering the amount is insignificant, decided not to claim it. Yes, now this is what an adjustment is. Now people, honestly speaking, by hook or by crook, you look at the adjustment, you will come and say depreciation is 1,500, you should have claimed it off, and therefore you have missed to claim it, and therefore you will say minus 1,500. Normally, I would say yes, I agree to you. Yes, but then let's be practical. Let's be practical. First things, at CA final level, you learn that when it comes to depreciation, income tax says charging of depreciation is mandatory. Whether you charge or not is not income tax headache. Income tax will say charge of depreciation is mandatory, which means if you charge depreciation, good for you. If you don't charge depreciation and the line says that he decided not to claim it, in that case, income tax will come and say, I am not going to give you it because you have itself decided you don't want to claim it. I don't have any obligation to give you this number. In that case, when you go to the next year, income tax department will never give you this 1,500 because they'll say you did not claim in the return. I am not going to give this to you, which means this is a matter of choice. This is a choice where you can come and say claim the 1,500 because you want to be a good guy, but you have to dispute it with the assessing officer, or you can come and say this is insignificant and therefore assessee itself decided to not do it. Income tax department will also say it doesn't matter, which means answer could have been ignored or 1,500 minus whatever works. Yes. Third, point number C. This is where surprised I am. I'm very surprised. You already have a dedicated question called 4A for clubbing of income. Why do you want to bring in clubbing for compulsory question? For the first time, I'm noticing TDS was not the only one which was given priority. income ICI now has asked you clubbing of question in question number 1, question number 2, question number 4, everywhere clubbing is coming in, as if clubbing has become one of the most favorite chapters of ICI, including CA final. This time even CA final had clubbing of income, because CA final clubbing is not even making sense. But still, MCQ question on clubbing. I don't know what is so interesting about clubbing that ICI wants to test you so much. Question says, the person has transferred 50,000 to his wife Mrs. Sunita in a financial year 22-23 without consideration. Some past year you transferred some 50,000 rupees. Amount was given by Mrs. Sunita as a loan to Mr. Samrat. You gave it to some third party called Samrat. Mrs. Sunita earned 20,000 rupees as interest during the previous year 23-24, last year, not relevant to me, which was also lent out to Samrat. During the financial year, Sunita has received 20% interest on 70,000 rupees. Clubbing of income with accretion concept. Clubbing of income with accretion concept comes and says only the first level of income will be clubbed in the hands of original owner. Any subsequent incomes will not be clubbed. In which case, I am going to come and say, take this 50,000 rupees and 50,000 rupees by 20%, which is 10,000 rupees alone should be taxable in the hands of this person, Mr. Neeraj. Mr. Neeraj is going to tax 10,000 rupees. The balance 20,000 at 20% will be taxable in the hands of wife only, not relevant for me, which means in this case I'm simply going to say add how much, 50,000 ka 20%, which is 10,000 rupees. So 10,000 rupees will get added to the statement of Mr. Neeraj. Now it is not part of P&L people because it has not been mentioned anywhere else. Yes, next. His 17-year-old daughter received 5 lakh rupees for acting in mythological show. The total income of Mrs. Sunita is 25 lakhs. Notice people, again clubbing has come into picture. Minor daughter, any kind of income earned by minor child will be clubbed in the hands of parents if to the parents whose income is higher. However, it is an important point to keep in mind that you will not do clubbing when the minor is receiving any kind of income out of her special skills. It says acting in mythological TV shows means she's done it out of her skill and talent, and therefore this income should not have been clubbed, which means I am going to ignore adjustment. This is where the problem starts. One of the most useless adjustments ever. It says he sold a large printing machine, the only asset in the block, which was originally acquired for 3 lakh rupees on 2nd October 2022, last year. And depreciation at the rate of 15% was charged. The machine was sold on 1st July 24 for 2 lakh rupees. People, here comes the short-term capital gains. When you have only one asset in the block and the asset has been sold off, the block will cease to exist, and therefore you now have to tax it under short-term capital gains. But again, same question I'm going to repeat. I don't know whether I should charge additional depreciation. It says he has sold a large printing machine. Now I am saying this is printing machine. People, earlier it was publishing. I am in the business of publishing, and now suddenly I am in the business of printing here, which means printing is guaranteed an additional depreciation item. Printing of books at CA final level has been confirmed to be a manufacturing operation, and therefore you are eligible for additional depreciation. But then comes the problem. Look at the last line. It says you are required to compute the total income and tax liability of Neeraj under both the regimes. Current year they are telling you have to check for both the regimes. Appo, what happened in this year? In this year, did the person go for old regime or he went for new regime? I have no idea. Answer can change substantially because of that. If you come and tell me in that year the person went for old regime, then in that case, that year the asset was put to use for 180 days. 2nd October 22 is exactly 181 days. 181 days the asset was put to use, and therefore you will now charge depreciation for 22-23, 23-24, and then coming to 24-25 you will find the capital gains. If you tell me no, that year the asset was came under old tax regime, in that case the person would have done 15 plus 20, 35% additional depreciation included. Asset cost would have come down today. Because asset cost will come down today, your capital gains would be higher in that case. So which means this question can be answered in two different fashions. One, on the assumption that year you had additional depreciation, or you did not have additional depreciation. Either way can work out. And that will have no impact on current year regime choice. I want to know what happened in that year. In that year, did I choose the new tax regime or old tax regime is the question which has come up here, and I have no answer on this, which means this adjustment is always going to give you a different answer based on what assumptions you make. I don't even want to proceed on that adjustment. Yes, pathetic question. Last one. It says during the financial year, the person has recruited 5 new regular employees on 1st June 2024, each receiving a salary of 20,000 per month. 80 JJAA has been tested, and 10 new regular employees joined on 1st July 2024, each receiving a monthly salary of 26,000. People, 80 JJAA says you cannot pay a salary more than 25,000, which means this is going to be ignored off. All salaries were paid by account paycheck and they participate in recognized provident fund, which means I'm going to take this 20,000 of employees, 5 months, and 20,000 per month into 5 employees into 1st June, which means I'm going to ignore April and May, 10 months ka salary. Yes, so I'm going to do 20,000 into 5 into 10 into 30% in order to get my 80JJAA. Notice carefully that 80JJAA can be claimed even under old tax regime or under new tax regime. Both the answers are fine. Yes, yes. So this is 80JJAA adjustment. Next, royalty of 4.9 lakhs was paid to Mr. Joy, a non-resident, on 30th June 2023. Now, people, this is not a wrong adjustment. To be very honest with you, this is not a wrong adjustment, and I'm very happy ICA is testing you on this. But again, let's be very honest, this is a CA final question. Yes, what happens is at CA inter level, ICA generally has a tendency to come and tell you that you make a payment without TDS, and ICA would come and say you current year payment you disallow. You disallow based on 30% for resident or 100% based on non-resident. At CA final level, ICA twists the question. ICA will go inverse. ICA will come and say, you already disallowed it in past years. Current year, what are you supposed to do? This is that question. This is a CA final adjustment question where generally they are now coming and telling you that you have made a payment to a non-resident last year on 30th June 2023 for use of his brand No Home without deduction of tax. Tax was deducted in the current year, which means this year you have to actually make a claim of this number. You needed to claim this 4.9 lakhs and not disallow it off. If you are disallowing it off, I'm sorry, you have not read the lines properly. 2023 this happened, which means current year it was to be allowed as deduction. Yes, this is a small error which could have happened if you have not read the year properly, and to that extent your answers would go wrong. Here, CA final adjustment people tested at CA inter, no complaints here. Yes, I know this is difficult one, but should have not been tested is what I think. Anyway, question says compute the total income of Neeraj and determine the tax liability for the assessment year 25-26 under both the default tax regime and optional tax regime, also confirming which regime is more beneficial to him. People, with all the adjustments here, if you notice, question number point, adjustment number 1, old tax regime, if I'm going, then I would have not claimed 8 I would have claimed 8 if I wanted, or I could have chosen not to claim 8 Second, this provision for gratuity, okay, same in both the regimes. Third one, depreciation, again, 8 non-8 may I have to check whether it is additional depreciation, no additional depreciation. Adjustment number A does not, adjustment number A, I would claim only in 8 not claim it in DTR. Adjustment number B is going to remain the same. Adjustment number C is going to remain the same. Adjustment number D is going to remain the same. Adjustment number E, I don't think current year will change. Yeah, current year data will not change. Depending on the past year data, your answer will change accordingly. Adjustment number F is fine under both 80JJAA, both old and new tax regime. Adjustment number G will be fine under both the tax regimes, and this is what it is. If you have done it at here, if you have done it till here, I'm sorry, you have still made a mistake. Yes, this is where the trick point is. This is something which I discuss at CA final level, and students at CA final level get worried because of it. The funny thing is, when you were checking for which regime is better, there was also one very interesting thing that you had to check, which is called AMT. Rahul, AMT and all, how did it come? Very simple. People, you have claimed 80JJAA. Yes, income tax comes and says when you claim any of the 3 deductions, 10AA, 35AD, and heading C of chapter 6A, which is 80JJAA, QQB, and RRB at CA interlevel. Because you have claimed 80JJAA, you were also supposed to, in this question, check for AMT. AMT was something that you had to check in this question, which means in this, when you were giving the answer was actually AMT or old tax regime, whichever is higher, compared to new tax regime, whichever is lower. That is the adjustment that you had to do in this question. If you have not checked for AMT, then you're going to lose marks there as well. Yes. Now, I'm not sure if ICA deliberately missed out to check on ICA did not realize that they had to check for AMT or not, but this was an AMT question as well. You were supposed to check for AMT as well. With all the adjustments that are going around for 14 marks, if you think you are not even able to understand the adjustment, then you have to check for AMT and all. I don't even know how much you've attempted in this paper. Yes, if I was the person who's gone in the same sequential manner, gone from MCQs to this question, trust me, by the time 2 hours would have got over, DT would have first question only would have got over. You would have not even moved forward to the subsequent questions. That is unfair. Very unfair. And I've just completed question number 1. I have even 3 more questions to go, and I'm already exhausted. That is the kind of aggression I am in right now. I'm not feeling happy doing this at all, but somehow I think it's important that we raise voices. Yes, I would like you all to take this opportunity to circulate this to all of your friends and tell them that this is how the paper was. This is what they should have been doing. If they have not done it, it's time for them to raise their voices and write to ICA to come and tell them that this is not how they were supposed to approach this paper. You are talking about someone's 6 months of life. Yes, at CA inter level, this is something very demoralizing. This should have not happened, especially at Jan 26 people. If you would have done it September also, you're not supposed to do it, but okay, if you would have done it September 25 also, a student would have had an opportunity till Jan 26. But doing it at Jan 26 is very, very, very unfair, because these students, if they don't clear, they unfortunately have to now read May 26 mein amendments. They have to completely redo their book. Capital gains is changing, TDS is changing, default tax regime is changing. So many changes happening at May 26. Students coming back reading this amendment just because you made a pathetic paper is not a very good idea. Yes, yes. Good. Let me take you to question number 2. One of the worst questions I've ever seen. Worst questions I've ever seen. So many errors in this question. What have you written is something which I don't understand. The question says, I am Mr. Paul, an Indian citizen with the Karta of VPHUF, and has stayed outside India during the previous year as follows. People notice carefully. Question says you have stayed outside India, which means these are the periods you were not in India. Other than that, you were in India. Now, which means I now have a problem. I have to now go and check whether in 1920, 2021 and 24-25, which of the years are leap years. Because that year, then I would have been in India for 366 minus these days. Correct? So, if I understand this properly, I think 1920 May 2020 was a leap year. Which means here I was not in India for 366, I was not in India for 112 days. I was in India for 366 minus 112 days. Here I was in India for 365 minus 221 days, and here I think in the current year I was in India for 365 minus 90 days. Why did you have to get there? Yes, it would have been easier if you would have kept it simple, straightforward. Unnecessary nonsense. Yes, unnecessary, you're trying to time pass. Now anyway people, 24-25, you are now coming and saying 90 days you were not in India, which means other than that you were in India. More than that you were there 270 days and all, you were there in India, which means you are an ROR. Very simple, straightforward. Let's not proceed forward. Apart from that, he was never went out to India for the past 15 years. Person has been confirmed as ROR. You simply had to write this as ROR and close the answer. Next, the VPHUF. Now, no, notice. Paul is a different person. VPHUF is a different party. VPHUF is owning 2 agricultural lands in India, one in Mysore and one in Saharanpur. Now, people, when it comes to agricultural lands, one thing I know is that agricultural lands are liable for agricultural income. But for agricultural income also, it is important that someone has to come and tell me whether it is rural land or urban land. It says one is in Mysore, which means I can come and say Mysore land is urban land. I have no idea. I would make that assumption only. Mysore, my understanding, is a city, which means Mysore land is going to be an urban agricultural land, and therefore agricultural rules will not apply. It is going to be fully taxable. At the same time, the other one is in Saharanpur. I have no idea what Saharanpur is. I am assuming Saharanpur is a village, and therefore that would be a rural land. But again, I am making assumptions here. Whose responsibility to give me that statements? No idea. It says the Mysore land is used for coffee cultivation. Okay. The cost of cultivation of the coffee is 4 lakh rupees and is directly sold in the Indian market for 15 lakh rupees. I am stuck. Stuck to the extent that the question now comes and says that the coffee has been sold directly for 15 lakh rupees. Now people, when you say coffee has been sold for 15 lakh rupees, have you processed it and sold it, or have you not processed it and sold it? If you have not processed it and sold it, then I will ask the question, is it urban land or rural land? If it is rural land, I will say full agricultural income, full exempt. If you say no, urban land, then I will say taxable. If you say no, it is processed and sold, again I will ask a question, is it rural land or urban land? If it is rural land, then I have to now come and make a second assumption. Assumption is whether it is 25-75 split or 40-60 split. If you are going to tell me, no, Rahul, it is rural, urban land, then I am going to say fully taxable. I have no idea. Why should I be making these assumptions is my question. I have to now make an assumption on what is the population of Mysore and then make a choice on whether it is rural or urban land without processing, without confirming what is it. Coffee cultivation normally has 2 things. One is grow and cure, one is grow, cure, grounding and roasting. That also has not been confirmed. It simply says cost of cultivation is 4 lakhs and the market is 15 lakh rupees. I have to make a choice on what is happening here. I have no idea. I can make an assumption whatever I want. I can come and say this is no, this is a let's say taxable land. I can come and say this is urban land, fully tax it off. Or I can come and say it is rural land. Then in that case I will come and say, why do I care about it? I need to come and check whether it is direct sales or it is not a direct sale but for the processing. If it is direct sale, I will again say fully exempt. If it is not a direct sale, then I have to come and ask what is the split here, 25-75 or 40-60. That also I have to make an assumption here. All that only because you could not write a proper line properly. Forget it off. Read further. It says the Saharanpur land is used for sugar cultivation, which is further used by the manufacturing of sugar in the factory which is owned by Paul. which is owned by Paul. Now, I am going to be very honest with you. I have seen so many faculty videos where faculties came and tell, let's do one thing. The sale of sugar has happened. So what we do is generally we have learnt in agricultural income, sale of sugar minus the manufacturing expenses, and you will arrive at the, and minus the fair market value of the sugar cane, in which case you will get the business income. Separately here you will get the agricultural income. You'll do a proper split. We call it composite split. I will tell you that is not right. Understand, land is in the name of HUF. Factory is owned by Paul, which means individual is owning the land, HUF is selling the property, HUF is making the cultivation, in which case I will come and say two different parties. If there are two different parties, the sugar cane has been sold by HUF to Mr. Paul, which means when I sugar cane I sold, I did not do any further manufacturing. From my perspective as an HUF, I have made a direct sale of sugarcane to an external party, which means whatever sale value I have is directly going to be agricultural income. I don't have to do a split. If you make an assumption, no, Rahul, this is an error, Paul is the person who is also the HUF, in which case I will then come and say, okay, take the Paul, and in that case, then this income has to be properly split between PGBP and agriculture income. Why should I do that? You have made a mistake. Question comes and says factory is owned by Paul, not by HUF, which means the sugar cane worth 8 lakhs was processed into sugar at a job work of 3 lakhs, sold in the market for 28 lakhs. Who did this? Paul did this, not the HUF. Paul has made the sale, and therefore Paul is going to be taxable for business income. HUF is going to be treated as an agricultural income. HUF will say fully exempt. I don't have to do anything. Why should HUF take the charge of Paul's income? That does not make sense to me. Yes, which means this question does not make sense. Either the cultivation of coffee is wrong and the cultivation of sugarcane is also wrong. That is the adjustment here. The sugarcane worth 8 lakhs was processed into sugar with a job work, cost of cultivation, and see, after all that nonsense, this is what they're asking. Question says, what is the residential status of the HUF? They're not even asking Paul, they're asking HUF for the residential status. Now people, for those who know, HUF for the residential status is determined based on control and management. At which point of time did they confirm to me that I am having the control and management in Paul's name? Now you can come and say, Rahul, what stupid are you being? Karta is the person. No, Karta can have control and management only. Who told you that? At no point of time has it been done. We have done it in our classes as well, people, that there is an opportunity where a control and management can be other than the Karta, which means now to make a statement here, I needed to confirm what is Karta's statement. I have to come and make an assumption again saying Karta is the one who is having the control and management in HUF, and by that logic HUF is R, because of that HUF is ROR. I can also make an alternate assumption where I can come and say control and management has not been defined, which means I can say control and management is not confirmed to me, and therefore I can say Karta is NR. If Karta is NR, I don't have to do anything of computation. First of all, why all this computation if HUF has been requested to you? What is the point of asking these kind of questions when you could not even give me the control and management condition? Yes, so that is what is asked. And then see, it says compute the total income under proper heads and net tax liability of VPHF under default tax regime. They were trying to test you on partial integration. I'll tell you this. They were trying to test you on partial integration. Otherwise, what sense does it make? You can take this income and everything is going to be non-partial integration. If you notice, the sugar, basically sugar is sold for 8 lakh rupees and sugar sugar is sold for 8 lakh rupees, cost of sugar is 2 lakh rupees, 8 lakhs minus 2 lakhs is 6 lakh rupees, which means 6 lakh rupees is going to be the sugar that is gone. Sugar cane is fully agricultural income, therefore fully exempt. Coming to the other part, my cost of cultivation has been confirmed to me as 15 minus 4, which is going to be 11 lakhs. Now 11 lakhs, if I take into consideration as assuming that this is urban, then I have to do agricultural income partial integration concept. If I don't take that into assumption, I can say 15 minus 4 agricultural income exempt. I can say 8 minus 2 agricultural income exempt, which means HUF has made 0 income. Paul is going to be the one who's going to pay PGBP tax. I can close this answer in one single statement by coming and saying everything is exempt, tax is 0. Why would I be sitting and wasting time on telling you what is the answer and why should I do partial integration when the question does not even want that? Question has been drafted in such a way that it looks like every single thing is agricultural income. I can give that choice. I can make an assumption. I can say agricultural income, don't pay tax, matter khatam. Yes, or now I have to come and say no, I have to step in the shoes of ICI and I have to come and tell ICI, maybe my dear ICI, you've made some errors, let me rectify all that errors. Error number 1, I will come and say Mysore is going to be fully taxable, 15 minus 4, 11 lakhs taxable income. 8 minus 2, 6 lakh going to be agricultural income. Then I'm going to take the balance cultivation cost, which is going to be 28 minus 3, which is 25, minus 8 is 17. So I'm going to say 17 is going to be PGBP income. So I'm going to take 17 plus 11, which is going to be 28. 28 plus another 6 lakhs is going to be agricultural income, and I have to do partial integration. Option number 1. Or I will say, let's take 15 minus 4, 11 lakhs. 11 lakhs, I'll make a split to 40, 60. Either I'll make a split to 25, 75, I'll make a split. Even more complicate life, and then do partial integration on that also. That also I can do. Which means to answer this question, there are 7 different possibilities. 7 different possibilities for a question which carries 6 marks, where I don't even know what is the answer to the first one. I don't even know what is the residential status of the Karta and the HF and all to proceed forward before I even make the statement. Yes, why should I be answering this question? I have no understanding. I have no idea what is going on here. Yes, great. 2B comes and says, examine the applicability of tax deducted at source as per Income Tax Act in the following independent scenarios. Ram Narayan, age 63 years, orthopedic surgeon, has borrowed loan from a friend to expand his clinic to include physiotherapy services and has paid 2.5 lakhs as interest. Professional receipts are considered as 52 lakhs and 48 lakhs in the financial years 23-24 and 24-25. Again, hijack the rules. Don't take the latest year, take the last year, which means I'm going to ignore what is 48 lakhs. I'm going to take 52 lakhs. 52 lakhs may notice, even though I'm an orthopedic surgeon, the relation is not for J. They are coming and saying I've taken a loan from a friend, which means this is 194A. But why is it 194A first of all? It just says I've taken loan from a friend. Now, whether the friend is R or NR, how do I know? 194A only applies when I make a payment to a resident person. If this is a conversation where I say, no, this is probably a non-resident, I can make an assumption of a non-resident, in which case this will go to 195. And if it goes to 195, I can say this is out of syllabus because 195 is not part of CA inter syllabus, but is rather part of CA final syllabus. In which case, I can come and say this is not going to be liable for TDS at CA inter level. Now you come and expect me to come and say, no, Rahul, what is this? You should have come and told CA inter only. No, so CA inter mein the friend is resident only, so do 194A. Why? Why should I be as a student making an assumption within 3 hours of my exam period? In my 3 hours, I expect ICAI to give me a proper question where I can give my proper solution. I am here to answer ICAI's queries, not to address ICAI issues. Correct. So by this logic, I would come and say this question is also wrong because this question can have alternate assumptions. Either it can be 194A, in which case I will deduct 10% TDS, or I will say it is 195, in which case I can do rates in force also. Anything can work out. Yes. Question number 2. Mr. Mahesh has intended to distribute cash to people affected by heavy flood. He maintains a bank account with Nationalized Bank and has withdrawn 2 crores in cash on August and September. 194N has come into picture. During the last 4 years, Mahesh has filed his return of income only for the previous year 23-24, as his income in the remaining 3 years are below basic exemption limit. 194N simply comes and says that when a person has not filed his return for the last all the 3 years, any 1 year also if he files a return, 194N provisions will not apply, because if you have filed returns for all the last 3 years properly, then only, if you have not filed a return for all the last 3 years only properly, then only 20 lakhs limit will apply. Here is a case where 1 year I have properly filed, and therefore in that case, I can come and say the provisions will be normal, in which case 1 crore is the transactional limit. 1 crore variko there will be no TDS. On the balance 1 crore, I am going to deduct TDS at the rate of 2%. Yes, now TDS and all, I will honestly come and tell you, most of the students would have not even addressed it off. You would have not even answered this question because most of the students don't read TDS and go. I will agree to it. So which means question number 1, vague. Question number 2A, wrong. Question number 2B, you don't know how to answer. 2, already gone. MCQs, we have already skipped off so many. What exactly am I supposed to answer in this paper? 3, Rahul, let's try 3. Maybe 3 would be good. Worst. Question says, Mr. Suresh is aged 55 years and is a resident individual employed in a government company. People, I'll be very honest to you. Prima facie, I read the word government. First question, I came and told myself, Rahul, government company, no, government employee. Let's do government employee conditions, because somewhere it says entertainment allowance. No, it says government company. Now, for those who did not read this word carefully, read it once again. Take a pause and read it once again. It's government company and not a government employee. Government employee is confirmed in some act. Government employee basically means all employees which are working for the government, in the sense they are like chief ministers, prime ministers, all those kind of employees working in ministry departments. Government company means government has invested in a company and that company is having an employee of. A government company employee employee is not the same as government employee, which means here it is not a government employee, it is a normal employee. Normal employee means you cannot claim entertainment allowance reduction. You will follow the normal tax rules. Normal rules as a normal employee is what you need to do. But if you have treated this as government employee, then I'm sorry, entertainment allowance is going to be a wrong adjustment for you. Yes. Again, what is this? Why did you have to complicate it? No. You can come and tell Rahul, what a master stroke. ICAI would come and tell you, oh wow, government company is what they wanted to test you and they're not government employee. So they've tagged you on this. No. I'm pretty sure that by the time suggested answers come, suggested answers like ICAI will come and tell you entertainment allowance पे deduction मिलेगा, which means what you have done is probably right in examinations. But no, why is it right? Government company is not a government employee. As a person, I will come and tell you that is not to be taken as it is. It is not to be allowed an entertainment allowance deduction because this is not a government employee. Let's make that very clear. Yes, whatever. It says during the financial year, the person has received a monthly salary of 1 lakh rupees and a DA of 25% of basic pay. In addition to that thing, as per the company's policy. See, once again, they do not say as per the government policies, as per the company policies, which means again they're confirming to you it is not a government employee. He was provided with the following allowances and perquisites. On account of natural calamity caused by cloudburst of Himachal Pradesh, he instructed the employer to directly deposit his basic pay and DA for the month of September 24 into PM's Care Fund. We call this application of income. Just because you are instructing your employer to deposit your money directly to a fund does not mean that you can claim a deduction of this. It will still be taxable in your hands under the head salaries. It will still be taxable in your hand under the salaries. However, if I notice the question carefully, question says they want the total income, which means they want the total income if you opted for optional tax regime. And because this is mentioned as PM Cares Fund, it means you can now again claim ATG. You can claim ATG. Net effect of the answer is 0, but your presentation will be different. Your presentation at the stage, if you come and say, Rahul, ignore it off completely, no. You have to add it to salaries and then claim an ATG. Even if your presentation has gone wrong, final adjustment will not make an impact based on that. But if you have missed out to claim ATG, I'm sorry, gone. If you have only added in salaries and not claimed ATG, this is a wrong answer. You definitely had to do that as well. Next, he received 62,500 as leave encashment during the year, equivalent to 15 days basic pay and DN allowance. Now, at this stage, if some student has come and said, Rahul, leave encashment least of the 4, let's do least of the 4, wrong. I'm sorry, gone. This is leave encashment received during the year. This is fully taxable. Yes, nowhere has the question come and mentioned that the employee is leaving the company, which means this is fully taxable leave encashment. Yes, third, like I said, entertainment allowance, it says 95,000 ka entertainment allowance hai. Now whether 95,000 ka entertainment allowance, first of all I'm going to add it as allowance, no doubts about it. Question is, should I claim section 16 deduction? If you say government employee, then you will claim least of the 3, which is 5,000 rupees. If you say no, then I'm sorry, you're not going to get that deduction as it is. You're not going to get the deduction as it is. Now this is a choice which you have to make along with ICAI. Next, his employer incurred 5 lakh rupees towards medical treatment of his married daughter outside India, including 1 lakh rupees for travel expenses of the patient and one attendant as per permitted by RBI guidelines. People, when it comes to RBI guidelines, when it comes to medical treatment, two things are there. Anything which you will incur there, which is basically treatment and travel, treatment and stay, will be allowed as per RBI guidelines. But any kind of travel expenses will be fully taxable if the GTI is more than 2 lakh rupees. So notice here it says 5 lakh rupees is incurred, including 1 lakh rupee for travel. Which means in that 5 lakh rupees, what I'm going to do, I'm going to say 4 lakh rupees is going to be the medical treatment and it is permitted by RBI. So the 4 lakh rupees is fully exempt. However, the 1 lakh rupees which has been incurred for travel expenses is going to be fully taxable, because the question itself comes and says that the person has in 1 lakh rupees per month ka salary. There it is 2 lakh rupees for the full year. GTI for the full year should be 2 lakh rupees. Here it is 1 lakh per month, which means the 1 lakh rupee here should be fully taxable, cannot be treated as an exemption. This I'm kind of sure most of the people would have got wrong. Yes, you would have not got this answer right. If you've got this answer right, I'm extremely proud of you. But yes, confusing, definitely confusing. Next, upon his appointment as Director of Finance during the year, the company provided free education to his child in a school maintained by it. The cost of similar education in a comparable institute is 900 per month. People, educational facility provided in company tie-up schools where the cost of education is less than 1,000 per month is going to be fully exempt. So therefore, this is going to be exempt. This is going to be exempt. With that logic, you're required to compute the total income. This is the answer. The total income answer is given to you. Now, in this, two things you're going to make a mistake on. One is you have not claimed ATG or salaries, as the case may be. And second, entertainment allowance ka answer itself you don't know, which means you can make both the assumptions here whatsoever. Answer will change accordingly. This is what the answer is going to look like. By the way, yes, you have to give a 50,000 rupees ka standard deduction, which I'm sure you should have done. That is not a mistake you could have made. Yes, which means this question is also wrong. So, question number 1, mistakes. Question number 2A, wrong. Question number 2B, you did not attend. Question number 3A, mistake. Don't know what to answer. 3B, let's hope 3B is right. I think 3B was the only question which made sense, but yet difficult question. Question says, examine whether the following are chargeable to tax in the hands of Mrs. Neetu and the amount liable to tax for assessment year 25-26. Neetu is the person. On the day of her marriage, Neetu has received gifts totaling to 5,40,000. Out of it, 60,000 was received from non-relatives. Doesn't matter. Any gift received on account of marriage is fully exempt. Next, on 1st November 2024, Neetu has entered into an agreement to acquire a vacant land from a friend for 25 lakhs. Acquiring land. Applicable stamp duty on the date of that was 30 lakh rupees. As per the terms of payment, 2% of the sale consideration was paid through account paycheck. People, when you make an advance payment for an immobile property, the date on which you make the advance, that date or stamp duty value is taken into consideration if the payment has been made by approved permissible modes. And the remaining 98% was done on registration. On 15th December, the date registration changed. STV was enhanced to 33 lakhs. Do I care? No, I'm not going to care, because I'm only going to be bothered about what is the STV on the date of agreement. On the date of agreement, it was 30 lakhs. I purchased it for 25 lakhs. Let's check 110%. 110% will come to 27.5 lakhs, which is still lower. And therefore, the differential 5 lakh rupees will be added as IFOS income. So I'm going to add 5 lakh rupees to IFOS statement. That is what the statement is. Third, it says Mrs. Neetu has gifted 4 lakh rupees on 1st September 24 to her husband, Mr. Aman, to invest in the business. See, clubbing once again. Again, clubbing has come into picture. Mr. Aman has started business with a capital of 12 lakh rupees, including the amount gifted to his wife, and earned a profit of 5 lakh rupees from the business for the financial year 24-25. So Neetu gave 4 lakh rupees on 1st September 24 to her husband for investing in business. Aman has invested the business of 12 lakh rupees, including the amount of gift, earned 5 lakh rupees. What are you going to do? Take the 5 lakh rupees and split into two. One is 4 lakh rupees and 8 lakh rupees. So what will happen? This split will happen, and to the extent the profit pertains to 4 lakh rupees, it will be taxable in the hands of Neetu. Yes, so Neetu is going to tax the extra for the number on 4 lakh rupees, which means take the 5 lakh rupees and divide by 3. Divide by 3 will give me, it will be some decimals, people. So take the decimals and then answer the answer, take the answer accordingly. That is what the answer is going to be. That is what the statement says. I think 3B, okay, manageable. Definitely not difficult, manageable, which means the maximum you could have done is 4 marks. Safe. 4 marks also, if you would have done it properly, then safe. 4A. People, I'm going to do 4B first. I'm very irritated. Let's do 4B first. 4B says, examine with reasons whether the following statements are true or false. Mr. Rajiv is a non-working partner in a partnership firm whose turnover is 18 crores. Books of accounts are maintained. The due date of filing of return of Rajiv is 31st July, since he is only receiving interest on capital. Is that true? No. We have discussed this in classes also, people. When it comes to return filing says when a partnership firm is liable for audit and is going to file a return on 31st October, all the partners, including non-working partners, will move to 31st October, and therefore the statement is false. Mrs. Kalra, a resident individual aged 55 years who has opted out of default tax regime, is engaged in the business of textile of yarn. During the previous year, her net profit on the business carried on by her was 3.9 lakhs. He has no other sources of income. He has contributed 1.5 lakhs to PPF. As his income does not exceed maximum amount chargeable to tax, he is of the opinion he is not required to file his return of income. Is he correct? No. People, when it comes to return filing, any gross total income, ignoring chapter 6A deduction, should exceed basic exemption limit. My gross total income is 3.9 lakhs. Now, the person has opted out of default tax regime, which means my basic exemption limit would be 2.5 lakhs. Since it is only 3.9 lakhs, you mandatory had to file a return of income. Therefore, this answer is also no. You had to file a return of income. Okay, if you have done return filing properly, and I did request everyone to do it properly, you could have got this statement very easily, which means another 4 marks is fine enough. Looks at the OR question. OR question says Mr. Solanki is 52 years and has income from business and profession. Filed his return of income for 25-26 before the due date of filing of return due to some incorrect information. Has received a defective notice under 139.9. Discuss the provisions in respect of defective return. People, this I'm assuming you would have not read properly, but yes, defective return basically says where there is any mistakes in the return, the assessing officer can issue a defective notice and request you to file a response within 15 days correcting the mistakes. If you don't correct the mistake within 15 days, they can treat the return as invalid. If the defect is rectified within 15 days, then the original return file will be considered as valid. That is what the statement is. I don't know why you will get 4 marks for that. What is the worth of 4 marks in that? But nevertheless, if you have known that, then you can write this. I would honestly prefer to write this one because writing 2 no's will give you more marks than the defective response. Great. That leaves me with the last question. Let me finish last question. Last question says, Mr. Kunal is a resident individual furnishing the following information for income and statements. The information says you are required to compute the total income if the person has opted for a default tax regime, which means the person is going for DTR, and the amount of losses to be carried forward with the period of carry forward. It says gross salary is received for part-time employment in a company. Income from salaries makes you liable for a deduction of 75,000 rupees. Claim 75,000 because the word used is gross salary. Rent received from let out property, claim 30% standard deduction. Interest payment on loan taken for the above house, you can reduce it accordingly. This can be reduced off. Profit from food delivery business will be taxable under the head PGBP. Profit from production of fertilizers established in August 24 in India. People, I am in DTR, which means nothing called Likey business, nothing called 35D business. This is going to be fully taxable as it is. Yes, this is where I got fed up. Last adjustment and still I got fed up. I thought this question at least they would have done properly, but no. Question says, on 1st April 24, Kunal has transferred 10 lakhs to a charitable trust with the direction that the trust will pay 2,40,000 to Mrs. Sunita annually. The Mr. Kunal can take back the full amount as per her wish. Now people, here is where the question is. I can look at the adjustment prima facie and I can come and say 10 lakh rupees transferred to the charitable trust will be taxable in the hands of Mr. Kunal. That is what I would make an assumption. Yes, any kind of benefit given to a third party for the benefit which is indirectly coming to the spouse will be taxable in your hands. But here is my question. It did not transfer income. It transferred let's say gift. It says Kunal has transferred 10 lakhs to charitable trust, which means Kunal has given a gift to a charitable trust. And income tax section 56(2)(10) comes and says that when a gift is given to a charitable trust, that gift is fully exempt. At the same time, if you notice, it says whatever money is there, the trust is also going to give 2,40,000 to Mrs. Sunita, which is Kunal's wife. Again, trust is also going to give gift only to Mrs. Sunita, which means again, gift given to trust, gift given to wife, all the transactions are fully exempt here. At no point of time does the question come and say that I have transferred any asset which is generating income. They have told that I have given a gift, the trust is also given a gift, in which case both the parties have just given gifts. Even if you have to apply clubbing rules, clubbing can only apply when some income is taxable here. In this case, when trust got the money, trust is exempt. When trust gave the money, trust is exempt. When the whole transaction is exempt, what are you talking about clubbing here? There is nothing to be clubbed here. I would say the answer is not taxable at all, which means this information was supposed to be ignored. If you come and tell me, no, Rahul, you should have taxed it, then my question is very simple. How much should you tax? 10 lakhs or 2,40,000? Because it says it is direction of paying 2,40,000 annually. Apo, I should come and ask a question, 2,40,000 to be paid annually, in the sense, are you telling me that charitable trust is giving interest to wife? If that is the case, then 2,40,000 is like taxable. But if you come and tell me, no, 10 lakhs has been paid right now, the 10 lakhs has been split over, let's say 5 years, and then 2,40,000 is given, which means it's technically Kunal's money coming back to Kunal. When I did not claim that 10 lakh rupees as an expense, there is nothing for me to add here, in which case that is also not taxable. My understanding, the answer should be not taxable, but no one can on prima facie looking at the adjustment give that solution. Yes, you would not have got the solution on the prima facie just by looking at the facts, but trust me people, the answer should be not taxable. If IC is coming with a difference of opinion, I am not going to agree to this whatsoever, not with the information given to me at least to start with. Yes. Loss brought forward has been given to you in the earlier years. Loss from self-occupied property. I noticed the question had DTR, which means this is going to be ignored, not relevant. Business loss from specified business covered under 35AD. Again, I am in DTR. DTR does not say specified business, which means this is also getting ignored off. Apo, there is nothing to be claimed as loss itself. In this whole question, there is no loss itself pending. DTR, what loss will you claim? No loss is pending. I think 8 minus 2.4 will also not give me loss. Yes, HP current year also will not project any loss here. So therefore, I don't even have to worry about that statement also. By that logic, This question had nothing to answer. Top line items are straightforward. This line item you have to make a choice. Next two were to be ignored. I don't know why did they have to give the statement itself. Maybe they wanted to test you where a person is opting out of default tax regime, but unfortunately they gave a different name. Yes, they should have probably said opting out, but somehow in the neck of the moment, I don't know who made the paper, but the person making the paper by mistakenly put opted for default tax regime, and he lost his whole credibility here. Yes, and this is how your paper has come out. This is how your paper has come out. Now, I took 1.5 hours just to explain this paper to you. I've not even attempted the question. I've not even written down the answers. If that is the kind of seriousness this paper had from my perspective, I don't even want to know how much time you took to write the paper. How much efforts would have gone from your side just to read the question and then write the answers as much as I have discussed with you right now. Now, I can't deny the fact that you would have not thought to that level which I have right now, because yes, in the heat of the moment, it is not required for you to do so also, but still, if that is the kind of impressions a person is going to have on a paper, then this is not ICAI standards. This is definitely not how an examination should look like. An examination is about testing a student on how much he's capable on, not about testing a student on a stress kind of an interview. If you want to do stress interview, give them a tough question. Don't give them wrong question. If I'm opening the paper and in all the paper there are so many reds, then there is nothing called a tough question in this. See, so many reds that we have. There is nothing called tough about this. Tough is a different concept. Wrong is a different concept altogether. When a paper looks like this, it is not tough. It is worthless. Literally worthless. I only want to look at the suggested answers and I want to see what kind of guts ICAI is going to show in this paper in suggested format. If ICAI, if they've done it properly and if they've done it very honestly, ICAI in every question is going to put an asterisk mark and come and say this can be done, this can be done, which means a person who is going to correct your examiners will now have to get a suggested answer itself of a volume length. The person has to now prepare different multiple solutions just to make sure that the student has written properly, or at the end of the day, ICAI would have to give up and some point of time give grace marks. Now, while I'm resting myself and I'm concluding this video, I would like to confirm to all of you that yes, I am extremely disappointed with the paper, but nevertheless, for all the students who have written the paper, my only sincere request to you right now would be to take calm. Yes, I know this has not been a good paper. I know this was not what you were supposed to do, but it's okay. You have not been the mistake here. It is probably from another perspective, and therefore what is not in your control is not something you should be stressed about. I am pretty sure, looking at September 24 at least to start with, where September 24 did not have mistakes but only had a tougher paper, and yet every single student was given grace marks enough to clear taxation paper. Right? And so to that extent, I would like to confirm to all of you that please don't take too much stress about this paper. If ICAI gets to realize, and you should definitely do that, but if ICAI gets to realize that the paper was that difficult or that wrong to that extent, then ICAI would end up giving grace marks to a lot of students, making sure that tax is not the paper that you will fail. Yes, and so therefore my only sincere request to all of you is don't treat tax as your difficult part to start over again. For tax alone, give it some rest, give it some time. Let February results come out. If you think you have not done good in other papers, then yes, this is the time for you to start over again and do it in May 26 faster. Prepare for the other papers faster. Wait till February for the results to come out. If tax is going to be the only reason that you're going to fail, then I would request you to strongly wait on it and see if you probably clear off. If you do clear off in February, then the month of March, you can easily start your articleship and enjoy a better life. But if not, then we will discuss about it. I will definitely ensure that by the month of March, you have all your revision series and your amendment lectures already uploaded on the channel so that you can use it to the best extent possible. I am just not doing it right now because I also do want to meet all those Jan students. I want them to physically come to my class and I want to physically have an amendment lecture with them so that I can train them properly for May 26. With that intention is what I'm holding back the amendment video, nothing else. It's easy for me to put the amendment video right away, but I just don't want to do it because I want to wait for them. Ignoring all that, if you're a student who feels income tax is the only paper, or I don't know, last I checked, people told me indirect tax was also not manageable. So if you're a student who's coming and telling me tax is the only difficult paper that you have faced, give it a rest. It's okay. The next 1-2 weeks, sit out calmly, be peaceful to yourself, pray, have fun, because I know you have already sacrificed enough. To attempt the Jan paper itself meant sacrificing your Christmas, sacrificing your New Year, sacrificing your Pongal. So you have already done enough sacrifices in life before you start for the next journey. So please do not take this to your heart and go forward and enjoy whatever is left with you. After results, we can definitely boost up once again and we can start something better and we can do it properly next time. I can tell you that if Jan 26 has come out that bad, then May 26 ICAI would realize and make the paper a little more comfortable enough to clear out. Yes, because especially at the end of the day, it's an amendment paper also. So they definitely have to give you more advantage and more weightage to that extent. But Right now is not the time for you to second guess yourself. Right now is the time for you to enjoy yourself with your family, with your friends, the ones whom you could not talk to after all this while. Spend some time with them, give them some happy mood, because yes, you're again going to part yourself from them once you start your preparation for the next attempt, or if you move to articleship nevertheless. Yes, so to that extent, my only sincere request to all of you is don't get as agitated as I am right now. Keep it calm, keep it chill. I'm also going to go home. I'm going to take some ice cream and I'm going to breathe myself out so that I can relax before I come back with a better video with all of you, with more happiness and with more joyous, so that I can enjoy these things along with you as much as I can. This is all from my side. I would like to thank you all for patiently listening all my winding up here and making sure that everything happens. If I do hear ICI is going to put out an maybe a suggestion panel or something like an review kind of a link, I will share it across on the YouTube channel so that every one of you can make a sincere request to ICI to come and consider this paper as an advantage paper to you. That is something which I will do from my side. But until that happens, keep calm, take rest, enjoy life ahead. This is all from your friend Rahul Agarwal. I am looking forward to seeing you all very, very soon in CA final and in your articleship journey, doing amazingly well for your life. So yes, until then, take care. Bye bye. Happy holidays.